Hi, welcome. It's Mary Ellen McGonagle, Senior Managing Director of Stocks here at Simpler with your weekly Edge Show. This week, we are going to go ahead and take a look at some of the impactful news that drove price action last week. We did end on a very sour note, but from there, we will go ahead and take a look at just where the markets did close and what we can be on the lookout for going forward. And then also beyond, we will get in behind the broader markets, take a look at sector rotation and other activity that is taking place at this time. And last up, viewer question of the week. First up, let's take a look at some of that news last week that moved price action in the markets. First up, the yield on that 10-year Treasury. It did rise up above that 3% level. And for those of you that watch my show regularly, you'll know that that is a critical point at that 3% where it can very negatively impact growth stocks. Also, Brent crude oil prices gained this past week. They're now up above another critical level, which is $100 per barrel. While this is very good for the growth prospects for oil stocks, it also will impact other areas of energy, and we will get into that. Also, we did see commodity stocks have something in the way of upside momentum, certainly compared to the broader markets. We'll review that. Second quarter GDP, the second estimate was released last week, and it was revised upward so that that first release decline is now less, which is generally good news. The most impactful news last week was the fact that Fed Chair Powell very firmly reiterated his aggressive rate hike policy as a way to reduce inflation. Their goal is to get inflation back down to that 2% level, and we are clearly quite a bit above that. I'll share with you what impact that had on the markets today. Also, we did get good inflation numbers today as well, primarily due to the lower cost of gasoline. However, that generally positive inflation report was overridden by Powell's comments, which we will get into as we progress here today. Next up, next week, consumer confidence as well as monthly unemployment data will be released. That's going to be later in the week. So from here, let's go ahead and take a look. Where did the markets close for the week? And here we are with the daily price chart of the S&P 500, and you can see that we did have a fairly sharp drop today, but let's take a look at some of these momentum indicators and where they stand on this daily chart of the S&P. We can see that the RSI, that relative strength indicator, has dipped into negative territory. The last time that occurred is this early June period, which in turn preceded a drop in the broader markets. These faster moving stochastics down below the chart of the S&P are also in negative territory, another momentum indicator below 50, which is negative. Also, take a look at where we closed the week, and I have been showing you this chart for a while now because this area here in June of consolidation is very critical, and at this point here earlier this month, a break above this area of resistance was constructive. However, this past week we have broken back below that 4170 level and even lower into today's close. This is a negative. A break below this 4170 can lead to a much lower market, and when married with these negative momentum indicators, we're not in a good place here with the S&P 500. Let's take a look at the Nasdaq. It was down the most this week, and here we are. We can see a sharp 3.2% drop. These bar charts here are the Nasdaq, and then this thin line is presenting you with the view of the yield on that 10-year Treasury, pointing out to you the fact that as interest rates rise, you will see the tech-heavy and growth-heavy Nasdaq generally decline. So here we are with the more recent period, July into mid-late August. Interest rates were in a declining mode, which in turn helped push the Nasdaq higher. Of course, strong earnings were also in play here as well. But let's take a look. We are now above this 3% level, and we can see that the Nasdaq has been in a declining phase. So we will continue to keep an eye on that dynamic. From here, let's take a look at some of the underlying sectors within the S&P 500. This is a 2-month daily price chart view of the 11 S&P 500 sectors. I've added a relative strength indicator and sorted it in descending order. We want to uncover where relative outperformance may be taking place, and then also it's important that you're aware of where those weaker areas are, all with an eye toward preserving capital. First up here at the forefront, energy. Not only was it the only positive industry group, it was up over 4% for the week, a very confirmed uptrend. I talked to you about that price of oil. I'll get into that with the chart as we move forward. But also, interest rates are impactful here in the sense that higher rates are generally positive for energy stocks. Moving along, we can see utilities here at the forefront, a defensive area, higher yielding stocks. And then also up here at the forefront are basic materials, and that would be those commodity areas that I spoke to earlier. It did get hit today, but overall, basic materials did outperform the broader markets as they were down less than the markets. But let's move on. Again, we do want to be quite aware of these areas in these weaker sectors here. And sure enough, technology, it was down the most today and overall for the week as well. We can see technology here rallying in July into mid-August, right up to this 200-day simple moving average, where it did fail a breakthrough above that. And then, of course, more recently, today's sharp drop pushing the RSI into negative territory. And then we have this negative, it's MACD, a moving average, convergence, divergence, indicating that this uptrend, the momentum has shifted into a downward position. Also from here, you want to be aware of this negative move into healthcare stocks, and this particular group had been holding in fairly well, not outperforming, but just holding in. This week's sharp drop pushed healthcare XLV down below this 50-day simple moving average. We can see that the RSI trending negatively and then in negative territory. Likewise with the stochastics, I will share with you the significant area of weakness within technology. Again, all with an eye toward preserving your capital and being aware of areas that are now trending downward. So from here, let's take a look at some ETFs that are really very educational as far as helping provide insight into what is taking shape in the markets. And again, a 2-month daily price chart view, and up here in the forefront are your stronger areas. So here we are with volatility, and for those of you that watch my show weekly, you'll know that for weeks it had been trending downward, holding really quite steady in a low area generally speaking. But this week's price action has pushed volatility up, and in fact today it was up 17% to close the week at about 25.5. Most impactful here is the fact that the volatility index is now back above this key 200-day simple moving average. This is another negative for the near-term outlook for the broader markets. Also up here in the forefront, we already talked about rising interest rates. Here's the yield on that 10-year hovering at about that 3% level. Other areas that fared well, this is DBC, an ETF for the commodity index, and you can see it's up above these key moving averages and generally trending in an upward fashion. A couple of stocks here that we will take a look at that are not only holding in quite nicely but actually breaking out of bases. Next up here, we do want to take a look again at those weaker areas, and it is all about technology. Semiconductor stocks now negative with their outside momentum indicators, and then just holding firm here at this 50-day simple moving average, but high volume on this selling points to further downside. Also, software stocks were down the most within technology as well. Both semis and software were down quite a bit. We can see this negative RSI here on IGV, which is a widely followed software ETF, and in the past, historically, that has preceded legs down in software stocks historically. So from here, I do want to share with you one industry group that really did get hit hard, particularly today within healthcare, and that is IBB, which is the Nasdaq Biotechnology Index. And this is an index that I had added to my MEM Edge report as a buy idea back here upon its break above the 50-day simple moving average, but we did remove it here more recently as it began to deteriorate and we noticed the momentum indicators shifting into a downward trend. So from here, let's take a look at those commodity stocks that I mentioned that are holding up really quite well, and I'll share with you some of the reasons why that is. First up is Steel Dynamics, STLD. I'm going to mark this chart up because a lot of my work when uncovering stocks poised to potentially outperform, they will break out of solid base formations, and in this case, I'm marking up the chart to share with you a cup with handle base breakout. And in this case, what occurs is the stock reaches a near-term high, pulls back, begins to form the right side of a base, and pulls back into what's called a handle formation. From here, you will want to be on the lookout for a cup with handle base breakout. That's when the stock breaks up above the high of this right side of the base, and we did experience that with STLD. Outside momentum indicators are in positive territory. This is all about supply-demand issues among steel stocks and also the fact that the price of steel has been rising. So one other area in the commodity space that is seeing upward price action, and that is coal stocks. Very similar dynamics with supply, demand, and then increased pricing really pushing these stocks higher. Also relevant are super strong earnings reports. A lot of these coal companies came out with their earnings in late July and early August, and they had superior numbers that were well above estimates. You can see with AREC, this is a small cap coal name, American Resources, had a gap up on earnings that pushed the stock above resistance and into a very clear-cut uptrend. One other coal name to keep in mind here is CEIX, that's Consol Energy, in a very nice confirmed uptrend here with outside momentum indicators trending higher. And again, all about strong earnings and a strong growth outlook. However, before entering into these stocks that are exhibiting positive characteristics, it's always important to keep in mind the backdrop of the broader markets. If we do see continued deterioration, even stocks that have strong fundamentals and are in uptrends will oftentimes get hit with the broader markets. I'm going to leave it there. Everyone have a great weekend, and I look forward to seeing you here again next Saturday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.